Hey everyone, welcome back to Corporate Decoder. Today, XCL Energy Incorporated just filed an 8K about a new distribution agreement, and I am seeing a massive amount of shares being prepared for sale. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing details a plan to potentially sell billions of dollars worth of stock, and it involves some pretty complex financial arrangements. So, XELL Energy Incorporated, a big energy company, has announced a significant move that could bring in a lot of money, but also potentially dilute its existing shareholders. On May 1, 2026, they signed a deal with a whole list of big banks and financial institutions. Think of these banks as the partners helping them sell their stock. This includes names like Barclays, BofA Securities, Goldman Sachs, and JP Morgan, among many others. The main point here is that XCL Energy can sell its common stock, which has a par value of $2.50 per S-share, for a total of up to $4,300,000,000. That is a huge amount of money they can potentially raise. How will they sell these shares? They can do it through what are called at-the-market offerings. This means they can sell the shares on the stock market, like the Nasdaq, at the current market prices. They can also sell them at prices related to market prices or through negotiated deals. The idea is to sell these shares gradually as the market allows. This isn't a surprise move. They had already registered these shares with the Securities and Exchange Commission, or SEC, a while back. They also filed a Prospectus supplement, which is like an update on May 1, 2026. This means all the groundwork for this massive stock offering was already laid. So, the company has the flexibility to sell these shares whenever it sees fit through a group of designated sales agents. These agents are basically the stockbrokers who will handle the actual sales. Now, it gets a bit more complicated. Besides just selling the shares directly through the sales agents, XEL Energy can also enter into what are called forward sale agreements. This is where it gets interesting. These forward sale agreements are with forward purchasers. Imagine it like this. Xcel Energy agrees to sell shares at a future date, but the details of the price and timing can be quite flexible. The sales agents can either act as agents for XCL Energy, selling the stock on their behalf, or they can buy the stock from XCL Energy as principals, essentially buying it for their own inventory to resell later. There are two main types of these forward transactions. The first is called an initially priced forward transaction. In this case, XCL Energy might enter into an agreement where they will eventually receive a certain price for the shares. The price is often based on the volume weighted average price, or VWAP, at which the borrowed shares are sold by the forward seller to hedge their position. But here is the catch. XCL Energy doesn't get the money right away from the sale of borrowed shares. They expect to get the cash proceeds later upon the physical settlement of the transaction. If they choose to settle in cash or net share it out instead of physically delivering shares, CL Energy might not get any proceeds, or they could even owe cash or more shares. This adds a layer of complexity and potential risk. Then there is the collared forward transaction. This type is even more intricate. XCL Energy agrees to sell a number of shares, and the forward purchaser will borrow those shares and sell them. The price they eventually get for these shares will be based on a reference price, but it is collared, meaning there is a floor price and a cap price. The final sale price won't go below the floor or above the cap. The floor and cap prices are determined based on the average prices at which the shares were sold during an initial hedging period. This means the final price XCL Energy receives can be quite variable depending on market movements during that hedging period. It is also important to note that the forward purchasers will be actively buying and selling shares to manage their own risk. These actions can influence the market price of XCL Energy's stock, potentially creating more volatility. XCL Energy will pay commissions to these sales agents, which are capped at 1% of the sales price for shares sold directly. For the forward transactions, the commissions are either factored into the initial forward sale price or deducted from the proceeds XCL Energy receives later. The actual money XCL Energy gets from these sales will be the total sales price minus these commissions and any other costs involved in issuing the shares. This filing is essentially announcing the formal agreement and providing access to the actual contract. They are filing it as an exhibit to their existing registration statement. The key document here is the equity distribution agreement itself, filed as Exhibit 1.01. This is the contract that lays out all the terms and conditions for this massive potential stock sale. The report is dated May 1, 2026, which is the date of this significant agreement. Now let's think about what this means. XCL Energy is preparing to potentially sell up to $4.3 billion worth of its stock. This is a massive amount, and it is designed to give them significant financial flexibility. They might be planning major investments, acquisitions, or perhaps shoring up their balance sheet for future projects. The complexity of the forward sale agreements suggests they are trying to manage the price and timing of these sales carefully. The collared forward transactions in particular aim to provide some price protection, but there is always a risk that the market moves in a way that is not favorable to them. Think about what happened to companies like Kodak when they did large equity offerings. While Kodak was a different business, large stock sales can sometimes signal that the company needs capital, and they can dilute the ownership stake of existing shareholders. When a company takes on billions in new stock, it can heavily influence share price and EPS number in the future. For XELL Energy, this move could be a sign of strong confidence in their future growth prospects, justifying the need for such substantial capital. However, it also raises questions about the current valuation of their stock and the potential impact on earnings, per share for existing shareholders. The sheer scale of this offering is the most striking aspect. Pointing towards significant strategic initiatives underway, it will be crucial to watch how effectively they deploy this capital and how the market reacts to the increased supply of shares. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.